So this is exclusive market fellowship. I think this is the 11th session. So probably we have this time, um potentially 1 hour or something of that sort, like to do live analysis, live trade, take live trades, answer questions, and also kind of do some mentoring and collective sharing and accountability, and then also learn live trade management. So in every weekend, if God permits and we are strong and we have the time at 8 p.m. GMT, we would have this live exclusive market fellowship. And then we will analyze at least 1 to 2 pairs of either volatilities or any other CFD pairs that runs on weekend. It could be also be crypto, and then we can learn from that. On that could be Monday and Sunday. So if I have time, I will call for the meeting both Saturday and Sunday. On Thursday and Fridays, morning 9 a.m. New York time, before the session opens, we have another session of exclusive market and fellowship. That is basically for Forex pairs. We could go on gold or BTC, we could go on Euro USD, GBP USD, any other Forex major pairs that you can talk of. We could go on them. We do a quick analysis and overview, and we take live trade. So if the trade is going to be for a long time, we will end the meeting and everybody manages the trade on their own, following the analysis and then the chart that we all share. So you are all welcome once again. Um, Let me do a quick check-in before we begin for today. So today we have Sir Ben joining right now. I think Ma
Yes.
Miss Margaret or Mrs. Margaret is here, and then Musa is also here. Sir Ben, can you please type in the group once again and then ask people that we have started so they can join? Um, so quickly, we want to move to the market once more time. We want to move to the charts once more time. Let's move to the charts once more time. Let's go to the charts. As a matter of fact, let me open a new derivative chart. Okay, so because we've been looking at 50 index for I think 3 consecutive times now, I would like us to go back to 50 index, and then because consistency on 1 or 2 pairs is also very important and can ensure some kind of good results. So yeah, so let's go to 50 index. This is the pure clean chart again once more time. on the 24-hour. So once again, I like all of you. I think from the past sessions, we've all established that 50 index is bearish. Okay, so I think we've all established that 50 index from here since last year up to here is bearish. Okay, so we can all see that. So within this bearish move, we can establish that there is a swing high or the highest point where price started falling from, and it came all the way down to make this low here. So this is the range currently that we have. But we have to monitor the structures that are being printed or formed as price was moving down. Okay, so we could see there is high, we have higher high, we have a lower high, low high, lower, higher high, sorry, lower low, lower high, lower low, lower high, lower low, and then lower high, and then another lower high, okay, or higher low, because this point has failed to give us a new lower low, which is a swing failure, a failure swing. Okay, so this is the first thing that we will establish. So at this point, we have a failure swing. Okay, so the other thing is, as this pair has been coming down all the way down, we have not seen any important or retracement. So here, up to this point, price give us just a 23.6%, 23.6% retracement. Up to here, the similar thing. Up to here, a similar thing. Up to here, similar thing. I think up to the low that we have not even had a 23% retracement yet. So if price is giving us a failure swing now and then moving up again, we want to see the last high that we had before the failure swing. We want to see that high being targeted, which is this point. That is the first thing that we want to look at. Okay. And then, but if we want to get any important retracement, I would first think towards a 23.6% retracement. That's the first point that I will look at, price to reach. So if we are talking about price having the potential of reaching this high before the failure swing and also this high, okay, which is at 23.6%, that gave the all-time low. If we are looking at this area, then we can frame our current setups or trading within that range. So now we are going to use this high here and then this low here as our range with this current equal highs as our internal range. So this is what we're going to look at right now. So we have something to work with. Why are we using this high as a reference point or reference high? Because this high took out a previous low, which is this low, and broke structure. Even gave us this low and pulled up a little bit here, and this high here also broke this low, broke structure into here. So even this high is also a reference high and an important high. But because we have already tested that area, we want to see if price will want to pull up more or probably just target reaching out to here once more time. So first, if we want to look at this high here first, we want to use our fib to measure this. And then normally if we get a swing range like this, we expect price to pull back into um, this is a sell or a bearish move. So we expect price to pull back into premium and then we can sell. So price first pull back into premium zone, which is anything above the 50% level. It came into 78, close to 88, close to 100, and price sold, but it failed. We got this low here that failed to give us a new lower low. Okay, so that is an important point. A failure swing is a sign that there might be more liquidity up here that price is coming to take, and then either fall to give us the low or probably break up to show us that this failure swing meant a reversal. Okay, meant a reversal. So these are the these are the two things that we should expect. It's either price will drop to give us a lower low, or price will break this high and then show us that this failure swing means that I want to uh, I'm creating a reversal. But if price is to break the premium zone sweep here, where is it likely to target? The next target will be here, which is that 23.6% level that I marked earlier. Okay, so here we have price inside premium again. So we should look for a reason to sell here. If not, price is already bullish moving to the premium zone. Because why is it bullish moving to the premium zone? It is bullish moving to the premium zone because we have a low, we have a lower high, relative equal high, lower but high, or a higher low. We have a higher low. Price is just moving up. Okay, until price retraces. Okay, so we will find a reason here to see if price is shifting to become bearish or not. If price is not shifting to be bearish, then we want to continue with the buy. Okay, we want to continue with the buy. But if we find a reason here that price has shifted to be bearish, then we might want to consider buying and then look for sells rather. Okay, because we are inside premium zone. So these are the basic things that we want to look at. Also, let's take it for instance, let's take it for instance that price is targeting going up all the way to that 23.6% there. When we measure on the FABE up to here, okay, where are we now? Price basically tapped 38.2%, came down to entry, failed to swing, went back to 23.6% and is consolidating. Broke the 23.6% up, and it looks like it has come back to retest. So with this in mind, we might want to say that, okay, price is likely giving us a bullish idea. Okay, a bullish idea. This is another thing that we can also learn from here. Now, let's go to the concept of support resistance. So what is the meaning of support? Support is where we see price being used as a platform or as a baseline or as a seat to bounce price to the upside. Resistance is acting as a ceiling which is pressing price downside. So anywhere you see on the chart where price had sold or has sold from, you can find support around that place. Anywhere price has sold from, especially like 2 times, 3 times. For example, here at this level here, okay, at this level here, we can see that up at this point, price fell down. We go back to that same area, price drops. We go back there again for the we go back there again. Here price drops down. Price sells. Price sells. Okay, so 3 times price has fallen at this support. Okay, what is the meaning of this? The meaning of this is that psychologically at this level, sellers are sitting here. There are sellers active here. So I always ask the question, if sellers are sitting at this level, what do you guys think will happen if the sellers become weak or if the sellers leave this place? Can someone help me with the answer?
If the sellers become weak, the buyers will take over.
Perfect. So if sellers here become weak, buyers will take over, which means that psychologically or intuitively, though sellers are sitting here, buyers are looking for the sellers to be weak so that they will leverage on their weakness to buy. So they are both sellers and buyers at that level, but the buyers are a little above the sellers. So the concept here is that when the resistance become weak or the resistance is broken, we will want to buy. So we buy at a broken resistance or a weakened resistance. Okay. And how do we know the resistance has become weak? We are going to learn that here. So this is just to show us that how to find a resistance level. Support is the same, but this time it should you should draw we have to draw it from the lower side, from the low side. Okay. So let's say, for example, which point on this chart have we seen price touching multiple times and bouncing to the upside? I can draw a line starting from here, and then you could see that many times you find price um, hitting this point, a bounce up, this point, a bounce up, this point, it moves up, comes to hit this point again, moves up. The next one came to hit here, but there were rejections. He couldn't hit it exactly, and then also moved up. So you could see that what is the meaning of these two? The meaning here is that there are buyers sitting here. So it's simple. So if the buyers become weak, what do we think will happen? The sellers will take control. So sellers are waiting for all the buyers at this level to be weak so that they will sell. Okay. So within this support resistance is where we have sat down to think through. Sometimes the support resistance level can be so wide. So, how do we make it more precise? That is what brought about the precision support resistance, PSR. So, with this concept of PSR, we want to look at um, the level that price have used as both support and resistance. Okay. We want to look at exactly that point. Or we want to look at levels where price have made large displacement or large distributions have been made from that point. So, for example, how do you see large distribution? When you see price moving away from a particular point with a big body movement. For example, if you look at just this point, you could see a very big green candle taking off from down here up to the up here. Okay, if you come here to, you will see that though this is a support place, a big candle took off from there. Okay, so this is a support place, but a big candle took off. Okay, this is a support, but a big candle had taken off. This point become our PSR. Okay, so we will want to now use just a line to represent that. Okay, so I'll pick a line and draw the line exactly, oh, sorry, exactly at that point. Okay, I don't want to miss exactly at that point. Sometimes the wicks can also help, but for now we are on the higher time frame, so let's use the line. Good. Now, so we have a resistance above us, which is, I can also use a line for the resistance, which is here. Okay. We have a resistance above us, and we have uh, support also below us. And we are looking for one side to be weak so that we will leverage. or we will take control. Let me refine this into here because the current moved downward, hit here and dropped. So you can see there is a large bearish candle that displays from here down. So I'm putting it at where exactly the body of that large candle this started coming down from. Okay, so I put it there exactly. Okay, perfect. Perfect. Um, so we have our PSR, okay, two PSRs. Now, internally within these two PSRs, okay, in the internal range here within these two PSR, we can see price is ranging. Okay, so price is ranging, but as price is ranging, it is still creating support and resistance, like a ceiling and a platform. So how do we utilize this concept here? One, we can see there is a high here, there is a high here, there is a high here. What do you call these highs? Anyone answer me? Can anyone answer me?
Internal resistance.
Perfect. So with
Internal
this,
resistance.
yeah, resistance, yeah. With this resistance, there is also another high here. With this resistance, okay, which are on the same or similar or kind of close related levels. Their support, really support is also here, here. Okay, and this one, there were rejections and engulfing that took price out here. So we can see resistance, but here price is moving in an uptrend in like price move up. Okay, we have high, lower high, high, I know failure swing or equal highs, price drops, relative equal lows, equal highs, lower high, lower high, equal highs, lower high, higher high, lower high, higher, lower high. I get confused by this thing. Okay, and then a higher high, a higher high. So what we want to see here is we have resistance, okay, here because price has displaced to the downside or has stopped here. One, two, three, even four here. Okay, so we want to put a line there exactly at where the bodies of the candle, okay, want to put a line there exactly there. Sometimes we can refine it a little bit, probably. Okay, well, so how to refine this point? You want to, as much as possible, look for the exact point where price has been used as both support and resistance. So if I want to refine this point, I can go like, here, price dropped down to hit this point and moved up. This was used as a support here. So what if I put it on the support where price hit and moved up? Okay, if I put it there, okay, if I put it exactly there on this place. Okay, now we can also um, see here that price hit that same blow line, drop a little bit, and we got a bullish close above it before price engulfed to now stay below. And you could see that when we got the bullish close above this internal line, let me make this line a red line to differentiate. Good. When we got, and let me make it a little big. Good. When we got the bullish close it, above it, price engulfs, drop down, but we see that price fails to always go above the red line. I don't know if all of you can see that. Price comes below, but it fails to go above. And the failure to go above led price to fall down. Now, price come back again, close a body above the red line, engulfs below, moves up to retest. There is a wick that pierces through the red line, but still price closed below. Staying below, price fell. Price went up again, give us a big body close above the red line, engulfs below, staying below, boom, price fell. Price now gives us a body close above the same red line again, engulfed below, but did not continually stay below. And then we got another body close exactly taking off from the red line. Okay, see, this candle is the candle that is going to help us to make money. This one. Okay. This so all up to this point, the bullish body closes that we were having. Okay. Okay, so let me put it this way. The rejections and the engulfings we were seeing, bearish rejections and engulfings we were seeing on the red line and below the red line showed that there are sellers active at this point. So, yes, sellers are active above the top here. That's why they even engulf from there. But they are more active because people don't just want to sell. They want to sell when they have confirmation. Okay, where they want to sell at the particular level where it makes sense to them to sell. So, but at this particular level, price kept rejecting. The rejections means that sellers are strong here, pushing price down. Okay, so price sells from here, which means sellers are sitting on the red line. Now, the body close, okay, even from here, we could see that this large bearish body that pushed down shows that there is a selling activity even here. This large body, bearish body, shows there is a selling activity here. Okay, so, and you could see that here price had bought to the upside here, and we had closed body below here, swept that. Okay, we used it. So price used here to buy, we swept it, price come back to it and then sells. So this point is being used as both support to go up, resistance to fall. Okay, so even before this area started printing, we could see this point being used as both support and resistance already. Okay, so now this big move above the red line is what we call indication. This is intention being revealed that the market wants to go above the sellers that are sitting here. And already we've seen price bought or gone above from the same point, gone up. So this is an indication that we have. When you get the indication, you will get what we call corrective or pullback. We get indication or intention that market wants to go up, price drops to pullback. So this is the correction that we have seen right now. Okay, we've seen the correction. Now, after the correction, and the correction will always, most time, take liquidity. Okay, we drop to clear this low, which is good. After the correction, price comes up again and it gives us another bullish candle close above the sellers, which is another indication. Now, the sellers still take charge, they sell. Now we get another bullish close, but this time it is small. Okay,
Maybe by
so
correction. Is it retracement or
yeah, retracement, correction, retracement, yeah, or pullback.
okay, okay. All right.
Good. So we get another bullish close. Then we come again and get another bullish close. All the bullish closes above the red line, above the sellers, is telling us that buyers want to take charge above the sellers. Okay, so the sellers are continually becoming weak. We get another bullish close that goes above them. But this time, price had been moving in an uptrend before we got the close. Now, we were supposed to sell from here, but price rather engulfed and got a very big close above them. This is the point where we say we have the final indication. Okay, now this indication is very clear And we have no problem reaching up to the blue line, to the top here. Okay, nothing should stop us reaching there if we get the confirmation here. So we get another indication here. This drop, as long if this drop does not go below the red line, this is a buy situation. So that's the condition. If price does not go below the red line, below the red line, sellers will take charge. Above the red line, the buyers are in charge, at least up to this point. Are we getting the logic here?
Yes, sir.
Yeah. So I'm trying to make it so simple as I can. Okay. So buyers are here now. So how do we know that buyers are here? We need price to stay above the red line to be sure. One, we have the indication, intention. Now we need price to come, hit there and reject, and then we should see engulfing. Price should continually stay above this red line for us to be bullish. That is all we need. So this is the point where we will now go to the lower time frame, like 4 hour or probably 8 hour. So we now go to the um 4 hour, and then because we've already mapped up our levels, we can now look for a reason to go bullish. So first, this is our indication. Price drops to hit it, and we see rejection. So we must see rejections and engulfing. Those are the requirements we need. Okay, so we see rejection and we see engulfing. We see rejection, price go up, break structure. Okay, rejection, indication, corrective, rejection, break of structure. Price drops back. Okay, so hit here, goes up, fails to give us a high, drops back again. I will call this as liquidity grab. Here as liquidity grab. Okay, now price falls back again, hit the red line or close to it, rejection and 4 hour engulfing. Price move above, comes to retest, engulfing, another bullish engulfing. Okay, so this pattern is giving us a bullish formation right now. Okay, now another thing I want to find here is, am I seeing any? It looks like price is falling down, but am I seeing any head and a shoulder pattern on the 4 hour? If I can see that, then I can confidently frame a setup around price reversing to continue the uptrend from the current sell or bearish market. I can draw from here to here, here to here, and here. I have my head and shoulder. Okay, bang. This is my right shoulder. This my head, left head, right shoulder. Then I have the trend line or the neckline for the head and the shoulder here. Okay, I don't need price to be below that trend line. Okay, and I don't need price to be below this trend line or the neckline. Okay, I have a right shoulder, but I don't need price to come below it. Below it, we are going to reach towards the red line again. Okay, so price should stay above the neckline for me to be buying. Are you guys with me on this? If the meeting closes, we would have to do another one. It's either we wait for like 5-10 minutes and I'll send Zoom again so that we can record. I like us to record. Or I just send Google Meet and we don't
Please,
record.
we're going to wait.
Okay,
Recording is very important for continuation.
okay, thank you. So this is the 4 hour. I see a head and a shoulder here. Okay, now I also see for price to fall down, I also could see another a high, low, higher highs, neck hit, and then a right shoulder. price formed a head and a shoulder for the fall, and then it sold very nicely. Okay. Now price goes back and retests the neck, sorry, the right shoulder, which is here. Okay, which is perfect. Okay, so the only way we could go more bullish is for price to take the right shoulder of the bearish head and the shoulder. So we have another neckline or trend line here. Okay, neckline or trend line here. So we have two head and the shoulder patterns. That's why I like this concept, because even if the buy fails, we will be able to have a very good risk to reward sell setup. Okay, so we have head and a shoulder bearish one, and then head and a shoulder bullish one. So price retested the right shoulder, came down again and broke structure, showing a bearish formation. Okay, but this bearish formation is also forming a bullish head and a shoulder pattern. So how are we going to say that price is going to go bullish and not continue going bearish? We need price to stay above the bullish neck or trend line or